let's set your agenda. Trump's tariffs take effect, levies hit an 100-year high, import taxes arrive for dozens of U.S. trading partners, and an 104% tariff on China. Market dysfunction, global bond markets convulse, sending U.S. 30-year yields soaring to touch as high as 5%. And China holds fire on immediate retaliation, but allows the yuan to sink to a record low. Beijing reportedly plans its next moves. This is when the orderly market sell-off starts to look disorderly. Since Friday's close to now, the 30-year yield is up some 40 basis points. At one point, we were touching 5%. At one point, the biggest sell-off for this bond market since 1982. This is the kind of move caused by a forced liquidation of leveraged trades being unwound of a fire sale of the most liquid asset. But here's what happens when a foundational part of the financial system starts to break down. The knock-on effects across the globe happen. 40-year yields for Japan rising at one point, the highest since they debuted in 2007. That's about 18 basis points now. Your UK 30-year yield also climbing to the highest since 1998. This stock market also flipping back and forth between gains and losses. At the moment, we're posting gains. We're up 0.1% for your U.S. future session. NASDAQ is 0.5%, while Russell 2000 falls 0.4%. We are still 12% lower since the reciprocal tariff announcement. Meanwhile, crude oil falls 3.2%, so there is still recessionary bets going on in this market. It is an important hour. You do not want to miss the conversation. So much to go over. By the way, George Sayre-Velis of Deutsche Bank warning that we are headed for a financial war. It might shift from a trade war to a financial war. Also writing that they're warned about confidence crisis in the dollar. Events over the past few days are, in our view, validating those fears because we are witnessing a collapse across U.S. assets. Okay, let's get to some other top stories that are trending on your Bloomberg terminal this morning. Ray Dalio is warning that investors aren't paying enough attention to a once-in-a-lifetime breakdown in the geopolitical and monetary order. The billionaire Bridgewater founder blames these underlying conditions for leading to the tariff disruption that has been dominating market action. He says bigger disruptions are still likely to come. The largest seller of eggs in the U.S. reported a 247% surge in profits last quarter after prices rose to a record high. Mississippi-based Cal-Maine Foods also acknowledged it had been contacted by U.S. authorities investigating price fixing. The ongoing avian flu outbreak forced farmers to cull some 30 million birds so far this year. And
of a pen, with the US president giving allies a tariff reprieve for 90 days, downgrading the hit to a tax of 10% while they strike deals with the Trump administration. It's a big backflip and one that comes at a cost.
While you appease financial markets for a bit, you've lost a lot of skin and you've shred a lot of credibility in what has happened.
Trump's turnaround was sparked by a sell-off of US government debt known as Treasury bonds.
Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. Yeah, I saw last night where people were getting a little queasy.
People like billionaire fund manager Bill Ackman, who said that bond yields are up, the dollar is declining, warning that these are not the markers of a successful policy.
Yields went higher. In other words, the cost of America borrowing money went up. So a huge lack of faith in US government debt. There's never been a question about their ability to repay until a 48-hour period, until early this morning Sydney time.
Westpac's head of financial market strategy likens this week to the fall of the Berlin Wall in reverse.
I'm actually a little bit shaken. What you've seen is an epoch change in the political and economic structure of the world. I genuinely think that what you observed yesterday was the breaking of this long-standing financial, almost moral authority of the US dollar and the US government debt.